The adverts for pensions never tell you how they're destroying your pension. Let's take a deeper look at Scottish Mortgage Investment Trust. For a long time, everybody seemed to love it, and the adverts are very attractive. I'll come to how they destroyed 50% of your pension in 1 year in a second. Looks lovely. Our purpose, lovely little thing there. Oh, you've got to have the manager speaking about how clever they are, technical leaders, lots of articles. Make sure there's a ton of sprinkling of AI. Well, with all that bloody AI, how did you lose 50% of people's pensions in 1 year then? By the way, I'm going to show you something which most of you don't realize. See that where it says discount at fair? You know what that means? And they won't ever advertise this to you. That means if you bought all the stocks they own yourself, you would actually be about 11% better off. The market is pricing the fund at below the net asset value of the assets the funds it owns, partly because, and we don't know this for sure, partly because the market's thinking, well, we don't think you're about to go any higher. We think you're probably not worth as much as you already are. Otherwise, it wouldn't be at such a deep discount to value. Managed by Baillie Gifford. Oh, God help us. Why don't you tell us this part? Why don't you tell us this part about Scottish Mortgage Investment Trust? Yeah, this part. Sorry, did I say 50%? No, it was more than that of your pension lost. Oh, it's okay, because if you hold for the long term, oh, no, you won't get it back at all. So where are you? Currently, if you've been with them since 2020, well, at least you didn't feel like you've moved forward. You're just living in the past, which to some people is quite nice. You're living in 2020. Imagine all the wonderful things you did back then. And whatever pension you had, you've still got. Well done. In fact, there was a time when they took you all the way down here. Now, you might say, well, if they've been performing so poorly, surely they're going to revert back to mean and they're going to go back. Well, actually, the data, as I've shown in my various Financial Times columns, the data shows that the outliers tend to underperform, and there was proof, because they revert to mean. They were just tossing coins and getting a lot of heads. Get a large enough group of fund managers, somebody's going to toss 10 coins, which come up heads. That was them, which we now know. But surely the ones who are rubbish will eventually do better. Well, the data doesn't support it. In other words, there's a lack of persistence of good performance, but there is consistency of poor performance amongst fund managers. Anyway, good luck with your pension. Not only if you're using them, I've picked on them, but I just got really annoyed by all these really slick websites and adverts. Oh, philosophy sounds clever. Oh, I've got a degree in philosophy. I've got a master's in philosophy, and I can tell you, you know what? It's results that count, not yak 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 about it. Their results don't justify how they've been doing. Anyway, have a look at, if you want free resources and to learn for yourself, as I've been teaching in my Financial Times columns, my Bloomberg TV show, my 18 books, have a look at campaignforamillion.com. If you want me to have a look at your portfolio, have a look at alpishpatel.com/links, and I'll tell you, well, red, amber, green elements of it. Thank you very much.